Hi traders, I want to welcome you to my channel. My name is Ruti Molawale. I'm a financial market analyst, Forex trader, and mentor. In this video, I'll be sharing with you the Relative Strength Index trading strategy. Relative Strength is the index, is otherwise known as RSI. Now, if you're yet to subscribe to my channel, please click the subscribe button and the notification bell so that you can get notified whenever I drop a new video. All right, let's get started. Now, the first thing I'm going to show you is how to attach the Relative Strength Index to your chart. And in order to do that, we need to come up to this section of the MetaTrader platform. And right there, we're going to click the button, the drop-down menu, and we'll see this menu. Now, the RSI is an oscillator. Oscillators are used to confirm trend. So you scroll to the side and you can see Relative Strength Index. Now I'll click the button, and this particular dashboard under parameters, we're going to leave everything as default setting. Then on the levels, now by default, you're not going to find 50. You will find 30 and 70, but then I always like to add 50. And it's simple, just click the add button, type 50, and that's all. It's added. Now on the visualization, just leave that also as default setting. Then click OK. Now, what really do we use this indicator to do? Like I said earlier, is an oscillator. It is used to help us confirm a trend, whether the trend, whether the market has gotten overbought, in which case we are looking for a bearish reversal, or when it is oversold, in which case we are looking for a bullish reversal. Now that takes me to the section where we'll talk about the 70, the 30, and the 50. Now these are the levels on the Relative Strength Index. Level 70 means the market is completely overbought, and whenever price gets to 70, whenever RSI gets to 70 rather, we expect price to start reversing in the bearish direction. And I'll give you instances. Now at this instance here, we can see that RSI is actually around the 70 region. So at this point, the RSI is completely overbought at 70, and we can see the price, at that level. So we could see a projection upwards, but eventually price began to fall afterwards. And if we scroll down again, we'll see other instances where the RSI got to 70 and there was a decline in price. Here, RSI got to 70, and we could see a minor decline in price. We zoom back again, we could clearly see in this instance, RSI got to 70, and there was a sharp, bearish movement in price. Again, RSI got to 70 right here, and there was a sharp decline in price. And at this point again, RSI got to 70, and there was a minor decline in price. So here we're able to establish the level 70. And when RSI gets to 70, expect price to go bearish. And the level 30 is another one where whenever RSI gets to 30, the market has gotten to an oversold level, in which case we expect a bullish movement in price. Now this is RSI at 30. And we could see a bullish breakout in price when RSI got to 30. So we can also look around, do a back test for when RSI got to 30. RSI at 30 here, and we could see a bullish breakout in price. Here, RSI got to 30. We had a minor bullish movement, and again here RSI got really stayed a while on 30, ranging around 30, and that led to a massive bullish breakout. Again, right here, RSI was even below 30 here, and you can see a bullish breakout again around 30 here, and another bullish breakout. So here we're able to establish that whenever price gets to, when RSI gets to 70, we expect, a bearish movement in price, and when it gets to 30, we expect a bullish breakout in price. Now the level 50. What is the level 50? For level 50, whenever RSI crosses from above 50 to below 50, it signifies a sell. Like in this scenario, price RSI cross from above 50 to below 50, it's a sell. Right here from below 50 to above 50, it's a buy. Again, from below 50 to above 50, it's a buy. From above 50, let's look at another scenario. From above 50 to below 50, like here, it's a sell. And on like that. That is how we make use of the 50 level. You can see here again, when it crosses from above 50 to below 50, it's a sell, and the market actually, was selling in that instance above to below 50, and we could clearly see a sell. So how do we use this in a trading strategy? Now, number one thing, a note of warning, which some people actually make a mistake about, is that some believe that whenever RSI gets to 70 rather, they should just place a sell instantly. That is very wrong, because in this instance here, the RSI got to 70, there was a minor retracement, but then the price still continued going forward, upwards rather, and that will have led to a losing trade. So it's not advisable to just place a sell because the RSI got to 70. Neither is it right to just place a buy because the RSI got to 30. That is not how to use the RSI. Look at this instance here. RSI got to 70. That's somewhere around here, but it still continued going forward again, upwards again. So if you had entered a sell, that would have been a losing trade. So don't always place a sell at 70 or a buy at 30. But this is how you can make use of this indicator. If the RSI gets to 70, it's an indication that you are expecting a bearish breakout. Now in this instance, you can see the RSI is at 70. Then we can come on the chart and draw a trend line anticipating a bearish breakout, and you can see that eventually there was a breakout in the bearish direction, which led to a profitable sale. And this is on 4-hour time frame. Now another example here rather, is that we can equally look at, in this scenario, RSI was trading around level 30, which is oversold. And in this instance, we can as well draw a trend line right there. We can even flip down to the 1-hour time frame to see how this really look. So you can do a scenario where you have an oversold RSI on 4-hour, and you can come down to 1 hour to look for your entry. And the rule at the entry for 1 hour is RSI above 50, which led to a bullish breakout. So that is a way to use the RSI. You can go to the higher time frame, look at overbought level or oversold level, and come to 1 hour after drawing a trend line and wait for a breakout. And the one we drew earlier, where we saw the RSI at overbought level on the 4-hour, we can also make our entry again on the 1 hour. We can make our entry on 1 hour when the RSI is below 50, and that will have led to a profitable sale. So the overbought and oversold levels are just to show us that the market, is getting ready for a reversal, while at the point of entry, we're still meant to use when RSI is below 50 for a sell and RSI above 50 for a buy. All right, so that's my video on how you can use the RSI, as a trading strategy, and more so this instrument can also be a part, of a major strategy. But then I've just shown you, a simple strategy you can use just with the RSI and trend line to trade the market. Okay, if you enjoyed this video, please click the like button, share this video, let many people see it, and also drop your comment. And above all, please subscribe to this channel and click on the notification bell so that you can get notified whenever I drop a new video. I'll see you in the next video. Bye for now.